The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Happy Wednesday, everybody. You're watching Scorebox with Karen Cho, myself, Steve Sedgwick, and these are your headlines. Well, who can't be excited about the JOLTS data? Come on, you lot. US job openings hit their lowest level, fascinating, since February 2021. Now, Wall Street trades in a holding position ahead of Friday's all-important non-farm payrolls report. We'll break down those JOLTS figures. I think that's worth doing. Indian equities, my goodness me, what a day yesterday. Well, they're steady today. That after $371 billion were wiped off the market cap yesterday. This is the Prime Minister Narendra Modi fails to secure a clear majority, but the country's leader strikes a bullish tone.
Citizens have expressed full confidence in the BJP and the NDA. Today's victory is a victory for the world's largest democracy.
Intel unveils its next generation of AI chips as it looks to regain market share in the all-important data center segment. CEO Pat Gelsinger outlines his plan to return to foundry profitability.
The first piece is to get back to leadership, because a lot of the losses are associated with having uncompetitive process technology, where the process technologies aren't as good as some of the alternatives.
Elon Musk confirms a CNBC report that he asked Nvidia to ship thousands of AI chips reserved for Tesla to X and XAI, saying the automaker had no place to send them. Let's take a look at the market action yesterday. It was a bit of a stop-start session. Markets flipping between positive and negative territory, digesting the data. And the reality is the data we've had in recent days has been somewhat soft. The manufacturing news, the JOLTS yesterday. What have we got on the numbers? Job openings falling in April. This is the lowest level we've had since February 2021. That combined with a slightly slower pace coming through the manufacturing sector would suggest that perhaps we're on course for a subtle slowdown in the US economy, perhaps setting the scene for a rate cut. However, we've had pushback from a lot of Fed speakers recently suggesting they're not necessarily ready to kick off that cutting cycle, that they're watching stubborn inflation. So investors at this point just waiting it out for more information. We've got the non-farm payrolls Friday. We're also looking out for more commentary from Fed speakers. And you can see by the finish, we were back in the green, up about 1/3% on the Dow. The S&P 500 putting on almost 8 points and slightly firmer for the NASDAQ. But in terms of big trades, again, it was concentrated around Nvidia. It was a safety play. Investors still reaching for that AI thematic, given the uncertainty around monetary policy. I want to take you to Treasuries, and this is how it played out across the Treasury market, ticking up slightly at the long and the short end, with 4.34 on the 10-year, 4.78 this morning on the short end of the 2 years, so just shy of 4.8%. The dollar. In that context, we are seeing strength elsewhere away from the greenback. Sterling supported. We're 127.73. We have given up the 109 handle, but the morning session we're stable 108.79 on euro dollar. Dollar is firmer versus the Japanese yen. The 155.6 mark is what we're watching on dollar yen rates, and dollar yuan is also in the green. Asian markets picking up on that faint green from Wall Street, and you can see it is a mixed old picture across the board. We are seeing modest increases on the Australian and Hong Kong markets. That's as good as it gets. Japanese stocks in reverse, down more than 1%. And across in Shanghai, we've dropped about 1/3%, Steve.
Karen, let me ask you a question. You are an amazing mother and a full-time mother, and you put that as your number one job. And you're also an amazing news anchor. And I adore working with you every day. So that you have pretty much 2 full-time jobs, don't you? Do you fancy another job as well?
Why not?
What would you, genuinely, if you could do another job, what would you do?
Well, I have another one, dog walking as well.
I've got the dog in there. I got that one, that doesn't count. Go on, if you weren't an amazing news anchor and at the same time an amazing mother, what would your third job be?
I'd create a tech company.
All right, so could you be a news anchor at I'm just asking, just randomly, could you be a full-time mum that you are now, and a full-time news anchor leading the coverage on our flagship show in Europe, and a tech CEO at the same time?
I possibly could, but I'd have to retreat from being so hands-on in some particular roles.
Something would have to give. Would you expect the same focus? Could you give the same focus to your parent? Well, I think you've kind of answered, to your amazing parenting and to your amazing news anchoring if you had a third job.
It'd be a reshaping of each role, wouldn't it?
It would be very tricky, wouldn't it? I only asked that question utterly randomly. Won't be covering it at all in it. Just hold that thought, all of you out there. Could you actually have more than one high-powered job plus everything else going on in your life?
I think the audience knows where this is going.
They might do, but it's just teasing for later on as well.
Steering them in a certain
direction.
direction.
But it also, and producer Mike hadn't spotted this, but it just ties in with the next story because I'm talking about jobs, you see.
Well, actually, there's probably a fourth job, isn't there, for the particular person we're talking about?
There's many.
Right, so you should have asked me about my fourth job, not my third job.
Just leave it hanging there. How many? You lot are a high-powered bunch. You're all C-suite or very rich or whatever you are. How many of you could do 2 or 3 or maybe 4 proper jobs, full hard-time working jobs? I don't think many of you could do it. I certainly couldn't. I hold my hands up. But talking of jobs, job openings in the US fell to just over 8 million in April, the lowest level since February 2021. The reduction points to signs of slack in the labour market. Well, a little bit, yes, and adds to expectations of a Federal Reserve. We keep writing that last bit. I don't think it's adding to many expectations from the Federal Reserve members themselves. But anyway, by September, investors are expecting further jobs data this week. I mean, it really is an amazing week of jobs data. We just had the JOLTS. We've got the ADP private payroll figures coming up, the weekly jobless claims, and that ahead of the mother and father of all data, May non-farm payrolls report on Friday. So, very simple question. What did we learn from the jobs report? We learned an awful lot, I think. We learned that actually things are moving in the right direction, but it's such a glacial pace, isn't it? Yes, job openings fell. Yes, they're the lowest since those figures I mentioned there in February 2021. But quite frankly, we are still at higher job opening levels than we were on average in 2019, than we were in February 2020, so pre-COVID period as well. So yes, it's moving in the right direction, but my goodness me, what a glacial pace.
But this was the point from Manpower when I caught up with the CEO, talking about a slowdown happening, but at a very, very slow pace. So the labour market is rebalancing, but unfortunately, well, it's like watching paint dry. In terms of what we're seeing more broadly, the other data points I mentioned at the wall, manufacturing, there's some slowdown taking place in the factory side. We saw it in some of the PCE numbers the other week in terms of the savings rate. That's come down, the amount of spending. So there is a change underlying the economy. And the question is when you see the response from the Fed and what that does to avoid any hard landing scenario, because there's always a fear that it takes a while for any cut in interest rate, any change in monetary policy to actually catch up with the economy. So if we are starting to see some features of a slowdown, is there a timing issue now for the Fed?
I just lost a bet with myself. I was sure that you would pick up on the key area, which is your expertise, which is the IT jobs, because the information technology saw the biggest percentage drop in openings, down 1.3% on the month as well. And I find that extraordinary. Thank you, David, for that data, by the way, our producer. Extraordinarily interesting, because whilst the economy is going pretty good. I mean, let's be honest about it. There are issues at the periphery. We know there's some credit issues and household issues. We'll find out more information about that later on in the week. But IT saw the biggest percentage drop in openings. And I think that's down to the subject you mentioned more than anything else, and that's AI, because AI is taking away those jobs.
Don't forget, everything we've been hearing has been about targeted spending from the C-suite. And that came through even in Salesforce numbers the other week. So they're witnessing it. It's not just broad blanket spending across in technology universe. It's very targeted on what you need in terms of cloud, cloud technology to try and power you towards AI, very early stages on AI use cases. So it doesn't feel as though there is a huge check being written to the industry, and as a result, that's very different to what we've had in previous years, where it has been strong pretty much across the board.
And different from the pup we've been sold, that all this AI is going to free up people to be more productive in their current jobs and is not going to take away their jobs. Show me the evidence, ladies and gentlemen. China's services sector grew at its fastest pace in 10 months in May. That is good news, isn't it? With the Caixin Services PMI rising to 54.0. The combined Caixin Composite PMI, which includes services and manufacturing, rose to 54.1. That is the highest in a year. Well, that is interesting again, driven by a surge in new business and export orders.
Let's take a look at the latest around the Indian election as Indian Prime Minister Narendra Modi failed to secure the landslide victory that had been widely expected in the country's general election. His ruling BJP party fell short of an outright majority and is on course to take 240 seats. That is well down on the 303 won in 2019. Modi will have to rely on coalition partners to form the next government after opposition parties led by the Indian National Congress performed far better than expected. Addressing a crowd of supporters yesterday, the Indian Prime Minister said voters have expressed faith in the ruling party and its coalition allies.
On this blessed day, the National Democratic Alliance is certain to form the third consecutive government. We are all very grateful to members of the public. The citizens have expressed full confidence in the BJP and the NDA. Today's victory is a victory for the world's largest democracy.
India's equity markets are experiencing a volatile session after posting their worst one-day loss in nearly 4 years and are raising more than $370 billion in market cap Tuesday. The benchmark Nifty 50 index declined nearly 6% as the election results started pouring in. On the BSE, Sensex raised all of its gains this year. Currently, the Nifty 50, you can see trading up, marginally up about 0.7%, but patches of red across on infrastructure again. We saw that yesterday. Oil and gas is down, and also metal. We are seeing a reversal there. Let's get out to Tanvir for more from New Delhi. Well, shock result here, Tanvir. Just walk us through the implications now as Modi has to regroup and talk to some allies and coalition partners.
Oh, absolutely. Karen, good morning. Steve, good morning to you as well. And that was a very insightful setup of what the scene is looking like here in New Delhi. The markets have absorbed the shock to a great extent, Karen. So you can see the markets stabilizing today. This morning, I think what we saw yesterday was really an overreaction to the result because the exit polls, and I guess if there's a lesson to be learned in this exercise, in this election exercise, is never trust exit polls blindly, was that the market positioning was built around the exit polls. The exuberance in the markets was built around the exit polls, and so some of the money has been unwound, has been taken off the table, and the markets have found some stability. Now, I just will very quickly take you through the next steps because it's not all done as yet. While Prime Minister Narendra Modi has claimed majority and has made the choice to go ahead and has announced his decision to actually go ahead and form the government. Now, we have a cabinet meeting scheduled at 11:30 a.m. Now, the fact that you pointed out that Modi's BJP on a standalone basis has not been able to clear the halfway mark and, a claim majority on a standalone basis gives more leverage to the NDA allies, to Modi's allies at this point in time, to the alliance partners, the coalition partners. And so there's much talk on the street about a cabinet reshuffle in the works. So a cabinet meeting, 11:30 a.m. local time, will happen. Let's see what comes out of that. In the next few days, we also have the RBI MPC meeting, which will take a decision on interest rates. Of course, it's going to be status quo right now. They're not going to move on rates. And this is a very sensitive issue at this juncture where, the focus is so much or more on fiscal policy than monetary policy. So we're not going to see too much come out from the RBI's meeting. Or MPC meeting actually over the course of this week. What we are also watching out for is another meeting that's going to happen today, the NDA alliance. Whether or not it's a fractious alliance or a peaceful alliance remains to be seen, and that's a big question mark. And what that does for the reforms agenda going forward is also a key question that investors are asking. The NDA alliance is expected to meet at the Prime Minister's residence at 4 p.m. today. So again, there might be a lot of hard bargains that the alliance partners would be seeking. The only other thing that I would add to this story is the opposition has not given up completely. They are pretty much ready to throw their hat in the ring. So the India Alliance, the opposition alliance, is also having a meeting at 6 p.m. and that bloc is trying to figure out whether they can attempt government formation at the center under the leadership of the opposition leader, Congress leader Rahul Gandhi. So that's something that could really put a spanner in the works if that was something that might gain momentum over the course of the next few days. It's not, as of now, it's not a scenario that we are going by with, not a central case, but something to watch out for on the fringe. On the fringes, rather. It's back to you guys in the studios.
Great. Thank you very much indeed. Yeah, huge events for the markets from the election yesterday. And thank you for your coverage yet again, Tanvir. Intel has agreed to sell a 49% stake in a venture that controls a chip fabrication plant in Ireland to asset management firm Apollo for $11 billion as it looks to secure external funding in its bid to regain market share in the chip sector. This as the company launches the next generation, how do you pronounce that, Karen? Xeon?
Yes, Xeon server.
Xeon server processor. It's got an X, so I don't know. There you go. Which it hopes will boost its data center offering and says its new AI chips will be priced below rival offerings. Well, the Intel CEO, Pat Gelsinger, told CNBC exclusively that China will remain a big market for the company despite geopolitical tensions. Well, Emily joins us from Computex in Taiwan with more from that interview. Emily, lovely to see you.
Great to see you too, Steve. Coming to you from Nangang exhibition here at Computex. This is the big tech trade show where AI has been the central dominating theme, and of course AI PCs, as we hear from all of the big chip majors, Intel, AMD, Qualcomm, Nvidia in their keynote addresses and their latest offerings to power the AI PC, and we're looking at this really being a seismic shift. So Computex has been bigger than ever in its 43-year history. This has to be the biggest one ever, also because all of the big chip bosses have arrived here to take part this year. Now, geopolitics has not really been a major talking point here. The focus has been on artificial intelligence, but what has been a common narrative, a common line in all of the keynote addresses that we've heard from, be it Intel, AMD, Qualcomm, Nvidia, is their acknowledgement of Taiwan and that they are at the epicenter of the ecosystem of the tech supply hard chain. Taiwan is a big market for them, and so is China. So when I sat down with Pat Gelsinger of Intel, I asked him about how they're navigating this supply self-reliance in China.
The challenges on China wanting more indigenous supply and U.S. export, has created a pathway that puts more pressure on any global supplier to be able to do business with and for China. And as I would like to say, navigate it carefully. Build products, make sure that we're obeying the laws of both countries, but also then build products that are compelling. Right? If our product is the best product for China, we see them as very pragmatic and making decisions that best support their industry and their consumers and customers as well. So we need to build good products that are interesting to China, but we also have great China operations that do a very effective job partnering with the local players. And with that, we're quite enthused by the momentum that we continue to see across our product line. China is a big market for Intel today, and one that we're investing in to be a big market for Intel tomorrow as well.
$20 billion from the CHIPS Act, and that is to build out the supply chain in the United States. We've heard about TSMC and some of the cultural challenges that they have to build out in Arizona. What is the biggest challenge for you?
Well, for us, clearly we've said the capital is critical. And as we've seen, the $8.5 billion of grants, the $11 billion of loans, the $25 billion of tax benefits, this is a big gap. And what we've said is that we have to have economic competitiveness if we're going to build these factories in the U.S. And that's what the CHIPS Act has done. It's created a level playing field if I were building a factory in Asia versus U.S. So the CHIPS Act is creating that balance. As we just talked about, is we have to get back to having the leadership technology again. So can I do it economically? Do I have competitive technologies that our products and other people's products use, which leads us to building a foundry? And that is a key piece of the strategy that I've laid out for Intel, is becoming a foundry for the world. And as I would say, we want to build everybody's chips, everybody's AI chips. We want them to be built and leveraging the U.S. factories.
Intel will be marking 40 years in Taiwan come next year, and they're already planning that big birthday party. Pat Gelsinger says he will be back to mark that. And of course, a big chip player in the market here, TSMC, just holding their AGM yesterday. And a couple of points I want to make here and share with you guys. At the AGM, C.C. Wei, the company's CEO, he's been elected as the chairman of the board, so now he will have a double-barrel title, chairman and CEO of TSMC. This is the world's largest contract manufacturer of chips. He also revealed that he held talks with customers about moving chip plants out of Taiwan. This is due to cross-strait tensions, but he said to them such a move would be impossible because 80 to 90% of the production capacity for them is all in Taiwan. C.C. Wei saying that instability across the strait is indeed a consideration for the supply chain, but we certainly do not want any wars to happen. Now, C.C. Wei did not indicate or name any of the customers that he was referring to. So we are, of course, covering all the latest coming through here from Computex, the big tech trade show, and the common thread, the big theme this year being AI PCs, and we surely got a lot of news coming out from AMD, Nvidia, Qualcomm, and Intel on that front. Coming to you from Taipei. Back to you guys in the studio.
Emily, terrific coverage. Thank you very much for that. Coming up on the show, we are expecting quarterly earnings out of Inditex later this morning. Charlotte will be joining us around the desk to break down the numbers. Also, Rishi Sunak and Keir Starmer go head-to-head in the UK's first election debate, a month to the day before the UK goes to the polls. And next, we'll be crossing live to Amsterdam for this year's Money 2020 Summit. Arjun will be speaking to the president of crypto exchange OKX. That is coming up right after the break.
Ambition to me is about doing better.
I think ambition creates a pathway.
The best advice I can give to someone starting off a career is don't have a career, have lots of careers, try loads of different things.
Talk to people and put your ambition out there.
I don't feel that I've hit peak ambition because it's a learning journey.
CNBC is where ambition meets opportunity. What does living ambitiously mean to you? Hear it from our CNBC anchors, reporters and global business leaders on CNBC.com.
Bitcoin is hovering just above the $70,000 mark as more countries around the world launch spot crypto products. Australia's first spot Bitcoin ETF began trading today, with Thailand also approving its own regulated trade option for the cryptocurrency. Arjun is at the Money 2020 conference with a guest. Arjun, crypto is fascinating when it comes to Money 2020. There was a time and a place where I used to go with you, and we know that it was sort of an add-on extra for a lot of the big payments companies, bit of fintech disruption, that crypto was really helping when it came to volumes. But then, of course, crypto dropped, the price dropped, and that impacted fintech. So now, as we see $70,000 back, what's the reality for some of these big players?
Yeah, it's fascinating. You see it with the sort of cycles when crypto's going through those winters, that the companies are out of these conferences. Now we're back up about 70,000. You're seeing a presence again here at Money 2020 for crypto. It's of course good news for the industry. They're celebrating it. And just to talk a bit more about the markets and why we're seeing this buoyancy at the moment, I've got with me Hong Fang, the president of OKX, one of the world's biggest crypto exchanges. Hong, just want to talk about the markets at the moment because it's been an interesting cycle as we talk about these cycles when it comes to the markets. You had the all-time high hit before the halving. Usually that's after. It seems like demand was dragged forward because of the ETF approvals in the US. Do you think we've reached the peaks for crypto at this point in the cycle?
I personally don't think so. I think there is still tailwind for how long this cycle can go. The value proposition for Bitcoin is always there. The only difference this time is that the ETF is getting a lot more spotlight and support to that value proposition, and more institutional and retail customers are seeing that. So, you know, it's actually a future money, and I think more people are seeing it, and I do believe that that consensus formation will take some time.
But what is the catalyst at this point? We've had the halving, we've had the Bitcoin ETF approvals. What's going to push crypto higher at this point?
I think it's really about awareness. It's about education. It's about awareness. It's about how many people are seeing what Bitcoin is for, and challenging their own old assumptions and challenging status quo, and take a chance at it. And I think that will change over time. We've seen throughout cycles that as you mentioned, the waves of questioning and actually accepting a new narrative. I think among many other crypto assets, Bitcoin is the one that really stands out with its value proposition being very strong and going stronger ever.
Well, what is that value proposition in your view? Because one day it's digital gold, another day people are talking about it as payments. Where do you actually see Bitcoin?
I think ultimately the fundamental value is that it's a digital native network of money that is good for store of value. That is the fundamental value layer. And then on top of it, I think there is still a lot of entrepreneurial efforts happening to promote the payment nature of it. We are not there yet for the second layer, second use cases, but the store of value, I think, is definitely gaining momentum.
The other big talking point here is really around the Ether ETF and the first stages of this being approved by the US regulators as well. Is this as significant as the Bitcoin ETF? Is there going to be as much demand?
I think so. It's the second largest crypto assets, right? Only next to Bitcoin. It plays a different role in the ecosystem. It is more programmable, if you will, and there's a lot more development activities on top of Ethereum. So I do think that we will start to see a reflection of that that we have historically seen in crypto markets, a reflection that in the ETF markets in traditional financial sector.
But it feels like things like Ether and some of these other blockchains as well are massively also less understood than Bitcoin by the broader investing market as well. While Bitcoin perhaps got some support from larger investors and perhaps more of the retail investors, these other ones aren't as understood. So how can demand match that?
I think that's exactly why the approval of ETF is important for the sector, because when you see a new ETF being approved for such a different alternative asset class, if you will, it naturally draws questions from various investors, particularly institutional investors that hold and manage retail money. It's their obligation to do more homework and understand and help more people understand what it is about. So I think it's a great educational and marketing opportunity.
So Bitcoin sitting roughly around 70,000 at the moment. Do you have a price call for this year?
I'll tell you, I had a price call 4 years ago, and we haven't got to my price call point yet. But I still am very bullish on where we can get to. I do think that as the awareness continue to build and consensus continue to build, the pricing of Bitcoin will continue to move forward.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.